102 points higher for the Nifty, looking in decently strong. Let's welcome in our next guest. Niraj Dalal now joins us. Niraj, good morning. Thank you so much for taking out time for us. Now, at this point of time in the market, there are two views. One is that demonetization will hit the growth quite aggressively in the near term, and that's taking the markets down. And the second is that dollar is going up, yields are rising, and that is leading to a risk-off trade. Which camp do you belong in?
I actually belong to neither camps here. It's very tough to take these kind of calls. The dollar is going up is a known fact. It has gone up across all other currencies. The rupee relatively has remained stable, right? I mean, we have been in the band of 66.5 to about 68.5 on the higher side. So we've been relatively resilient. So in that sense, I don't see too much problem on that front. Plus, we have enough reserves, and I think the domestic situation, if you remove the demonetization, was reasonably good prior to a month back. So very tough here, very tough to take these kind of calls. I don't know how people within the first 15 days or 20 days of such an event are taking calls. I neither have the expertise nor the confidence to take a call on what demonetization will lead to. One thing is for sure: there are winners and there are losers. And as a stock picker, I would want to focus on companies that will come out winning out of this whole thing. And any sort of correction in markets like this is a good opportunity for stock pickers to identify good stocks and invest meaningfully. Yeah.
Right. What businesses do you think would benefit? Something like a Paytm, something like a Swiggy is not listed. Apart from the digital business, which has seen a very, very big move in their transactions, what other businesses do you think will benefit from this move?
So, clearly organized retail seems to be something that's going to win big time because of this, right? I mean, the local kirana or other shops or whatever, they'll take time to adjust. I think, people who are already on stream, who are already providing alternate means for paying, they would be beneficiaries. This is a straightforward thing. People who make the equipments, right? So I'm not sure if you've seen a company called TVS Electronics, right? I mean, it's been up $100. I mean, almost 40-50% in the last 10-12 days. People don't look at that. So, I'm sure one needs to dig deeper and figure out. So, what happens with the money that has come into the banks? The government penalized them with the CRR provision. But again, the deposit base has gone up. They are getting money at a cheap rate. A lot of money has come into the system. This money needs to be redeployed. So, whether 12 lakh crore comes in or 14 lakh crore comes in or whatever, this was money which was not in the banking system, which has come into the banking system, which is available for lending, which will lead to reduction in rates, which will lead to infra capex pickup. These are all very, very logical and easy things to put together. Now, the question is, will this happen? And for that, we need to see what happens, 15 days from now or 31st December, first week of January. How does the government approach this whole situation once we have the definite numbers? And, I'm sure there are winners there.
Right. In terms of, losers, one would say that luxury consumption would definitely take a hit. Again, just taking an example of something like a Titan, not really you would be bullish or bearish on that name, but Titan will see an impact because, it's a lot of its businesses is cash. It's a high-end market. When there is wealth effect, such businesses do tend to have an impact. But again, the point, it's also a very big unorganized market in the jewelry market, which may take a hit. So how would you balance for, this sort of organized retail, where there is unorganized, and Titan, which is organized, but will have a wealth effect impact?
So, yes, you will have to wait for a couple of quarters. You will have to do your research carefully. You will have to, dig deeper because the initial feedback I have is that, Titan should be a reasonable beneficiary of the organized jewelry market, being there, because a lot of the unorganized jewelry market share will shift to Titan. But this does not happen tomorrow, right? I mean, it's going to happen over the next couple of quarters, 3 quarters, when people realize that, if we are anyways going to buy with a bill, might as well go to a Titan, get stuff done, where you have 100% satisfaction guarantee and stuff like that. So these are real structural changes in industries, right? And they don't happen overnight. So, for me, I would look at the next couple of quarter results. I would keenly follow management commentary. I will do my own research, visit these shops, see what's happening. Are people buying? I have a Tanishq showroom right opposite my house, and first 4 or 5 days, so maybe from 8th to 13th or 14th of November, the shop was literally empty, just the watchman and the salespeople. But of late, I see people are in the shop. I see it's a busy premise. Things will change. This is the wedding season. The timing of this announcement is also a little unfortunate for players like Titan. But that's always going to be the case. These things always come unannounced. And companies like Titan, they have shown over and over again, they have this classic ability to adapt to circumstances. The same thing happened in 2007, the same thing happened in 2010. People started questioning Titan. One of the reasons why investing in companies like Titan is so much more easier is because that they have the ability to adapt to changing circumstances. They are clean companies. Management is extremely transparent. Management is very straightforward. Management has a lot of experience, and they have weathered such storms, right? So if you had to put money on companies, then, companies like, whether it is a Titan or a Lupin or, for that matter, companies that have proven expertise, and over again, maybe a Sun Pharma, they're all, great companies. They will come out of tough situations. You want to bet on the fact that they'll come out of tough situations, and that's essentially the right time to buy these companies, right? I mean, when Lupin had the US FDA issue in 2006-07, that was the best price Lupin was available at. It had straight 14-15 quarters of improving margins and improving EBITDA. So, great companies give you great opportunities, and, do your homework, figure out, and then go ahead and invest.
Right. You think that, this correction that we have seen, the worry in the market, what will happen on the macros of India, how rates would progress, would give opportunity on a lot of tried and tested names also with the correction that is coming?
I am sure, we've seen, about a 7 to 8% kind of a correction on the index, and about 15 to 18% kind of correction on all large caps, So you had something like, just for the namesake, something like a Grasim, went from 1,000 to, 760, 780. That's about 25-24% correction. And you already see Grasim bouncing back to, 850, 860 levels. So yes, each correction will give you an opportunity. The idea is to, identify the leaders, identify the companies that have earnings. See, even in periods when market corrects, if you have put your money in the right stocks, and I mentioned TVS Electronics, it's just a beneficiary of what is happening. But even if you had put your money, for example, at maybe 620, 630 in Sun Pharma, you are up, in the same period about, 7 to 8%, 9%, or maybe a Lupin, or even for that matter, companies like technology. So, for example, Tech Mahindra, Infosys, TCS, HCL Tech, all of them have, bounced, 5 to 7%, probably more from the lower levels. So the question is, do not look at, we are too fussed about, what's happening in the market. We should, as investors, be more fussed about independent companies, valuations, where are they hitting troughs. You had Infosys available at $900, slightly lower than $900. Tech Mahindra at 420, with the company saying the worst is behind us, no one was a buyer. And, you had Tech Mahindra go to 480 within 7 to, 10 trading sessions. So things like that are available. So, do your homework, identify the stocks, and don't be too fussed about, what's happening to indices. Just to give you a sense of, how selective our understanding is and you know what we kind of focus on. Everybody focused on the Italian referendum yesterday, right? Everybody knows what happened in the Italian referendum, and it was a no, and everybody thought that, you know, markets will correct and tank big time. And you know, if you had asked 90% of the people who was the prime minister who asked for the referendum, they would not know the name, you know. So it's good to know all these things, but you know, also on the side, nobody talks about what happened in the Austria elections, right? Which was, to my mind, a far more important thing for the euro than the Italian referendum was. Italian referendum was never about the euro, and which is why you saw the euro go from 1.05 to 1.07 or you know, higher. The Austrian election, the pro-euro party won with 54 to 46% vote, but I didn't see a single channel covering that. Not any channel. As if the Austrian election did not happen. There, the opponent was a very strong anti-euro candidate, and you know, he lost. So you know, it's okay. I mean, the idea is we look at what we want to look, and that's not necessarily the best thing as an investor. I think we need to look at the whole picture and you know, go ahead and put money where we have conviction.
Right, and in terms of, you know, rates coming down, that itself will give a different opportunity irrespective of what's happening with the macro. A lot of companies would benefit in terms of their businesses, their projects would become viable, new opportunities would be there to invest. So do you think rates coming down itself is a positive?
%, yeah. I think, you know, if I had to make you know, a logical case of what's likely to happen over the next 3 to 6 months, or maybe, you know, let's extend it to maybe, you know, 2 to 3 quarters. One thing is for sure, you know, rates are coming down. The second part is a lot of the money that has come into the system is likely to be redeployed in you know, restarting the capex projects or executing new projects, or you know, doing more infra stroke power kind of sectors. And the third part, you know, I think which we should also start looking at now is probably the budget, right? Too much of noise is being made about demonetization and all that, but if you know, if one were to look at the budget and try and focus and see what's possible, I think there is a very good chance that you know, there could be a reduction in corporate tax rates, individual tax rates. All of that would be huge positives. You know, we've just got so blindsided by this demonetization process and you know, correction in the markets that you know, these three things, I think, can restart the entire process again, and we will never be talking about demonetization again, maybe in February. So you know, you call me an optimist. I am an optimist, but you know, I think these three things seem logical to me. These three things will happen, and you know, there are great opportunities. But you know, for that you will have to start working now, start identifying companies now, start buying companies now. You know, once these things happen, the companies would have already factored that in, and you will be buying it you know, more expensive than it is right now.
Right. In terms of financials, you see a very big opportunity. I'm talking about companies which operate into mutual fund, which operate savings via the banking space and not necessarily gold and real estate. Do you think that as a sector will benefit? Would now people start to invest much more in that channel?
I would think so, right? I mean, when you make it, you know, in some form or the other, the government is disincentivizing gold holdings, right? The kind of feelers that you are getting, the kind of messages that you are getting, nothing is concrete. But, you know, if I were an investor, I would say, you know, there is no point investing in gold. Historically, returns in the equity markets are far better. Gold was a measure of safety. Now, if you are going to have a measure of safety, invest in gold, and suddenly you will realize one day the government is coming and taxing your holdings or whatever, even if there is a 1% probability of it, people are not going to go ahead and buy gold as a measure of safety. Yeah? So you know, clearly that shift is likely to happen, right? Plus, with everything coming, you know, into the in mainstream, you know, what kind of avenues do you have? I don't think you know, gold as an asset class will do well going forward. I don't think real estate as an asset class is something people are keen to put money in right now. So unless you're talking about real buyers, right? For them, over the next 6-12 months, there will be a great opportunity when rates come down in terms of the interest rates, and where the prices of housing also comes down or readjusts. But other than that, I don't think anybody's buying a third house or a fourth house for investment purposes now. So I'm sure. I mean, I am reasonably sure that's happening. So a lot of money is going to come into stocks. A lot of money is going to come through mutual funds. A lot of money which is lying idle is going to come into the market. But give it a couple of quarters.
Right. In terms of real estate, the point that you made, in the next 6-12 months there could be a decline in prices. There could be a big slowdown. Real estate is a big part of the GDP as well. If there is a big decline in prices or a big slowdown, it will have an impact on earnings?
Sure. See, my sense is that there will be a readjustment, right? I mean, buying a house was unaffordable for most people. So I think what's going to happen is that the genuine buyers are going to come out. The real estate guys will have to reduce rates. There is no question answer about that. You will be able to distinguish between the efficient players and the non-efficient players. The non-efficient players who were just parking somebody else's money or whatever, and who are very leveraged, or trying to do more than they can manage, they are going to be hurt very badly over the next 6 to 12 months. But for the efficient players, I think if they behave sensibly, and if they are able to bring down prices, see, there is a huge demand which is there at a particular price and a particular rate of interest, right? I think over the next 3 to 6 months, we will hit that sweet spot where buyers will be confident and comfortable of buying, and real estate guys will realize that I can't hold this price. I need to come down 10% or 12% or 15%. So my sense is yes, prices will decline, but there is a very good chance that that's compensated by the real buying that's happening. So over the next 3 to 6 months, we'll have to see how this pans out. But at this point, I am hopeful that there will be a readjustment. There will not be a huge decline.
Right. Actually, it can be very positive for a lot of real estate companies as well, what you're saying, right? Realizations come down, but volumes increase, inventory cost comes down, holding cost comes down. And in the last 7 to 8 years, a lot of real estate companies have tried to repair their balance sheet. So they're not as over-leveraged as they were at probably the start of end of 2008.
Correct.
And in terms of housing finance companies?
No, I completely agree with you. I think for the good guys, funding is going to become easier. See, housing finance companies, each one has a specific line of business. So, some people are predominantly financing trucks, some people are predominantly financing gold, some people are predominantly financing, just houses. Sorry, I'm talking about NBFCs, not just housing finance companies. So, in that segment, I think the housing finance companies, which are efficient, should benefit going forward. The other part, where you are talking of either MFIs or gold or truck businesses or those kinds, one would need to see how they adapt to the situation. I think I wouldn't write them off, but I wouldn't be in a situation where I will say that go ahead and buy those companies. That might not be the best situation.
Right. And in terms of valuations, maybe after this results or next results, once the entire impact of demonetizations come back, they are great businesses. At least some of them are great businesses to own, so they'll continue their growth path once they adjust.
Yeah, I think, see, Pankaj, a lot of the answers to these questions will depend on what happens post December 31st, right? I mean, once this entire process is over, once we know what kind of numbers are there, once we know how the companies have adapted, so you had a Ujjivan coming out yesterday and saying that, they have done well in testing times. So, this is the time when good companies with good management, good balance sheets will take away share and business from inefficient companies with bad balance sheets and management that's not able to adapt to circumstances quickly. So yes, over the next couple of quarters, once you look at the numbers, once you look at the overall scenario, and when I say quarters, we'll have the budget sometime in first week of February, last week of January, whatever. It will be a new reset. By then, if the government aggressively comes out, reduces rates, kickstarts all the projects, and as I said, cuts taxes, corporate as well as individual, we could be talking in a different manner altogether, come February. So let's wait, let the dust settle down. I think this is a great time for anyone who's looking to invest in the market to identify the stocks. A month back when I was meeting a lot of people, everyone was saying that, this stock has gone up too much, I cannot buy it any longer, the valuations are not making sense. For all those people and all the others, right, this is a great time, identify the stocks which you wanted to buy, see if the business model is intact, see if they are doing the right things, see if they are going to benefit from this process, and see the prices, they are down 15 to 20% from when you last looked at them. So then if everything else is the same and just price has gone down because everybody had to sell, go ahead and put money. When will you get an opportunity like this?
Right. So organized retail, probably real estate, and some other names like commodity, what you would look at. So which are your top picks? Any top 2 to 3 picks that you like?
Yeah. Yeah, see, I'll tell you sectorally, so there are two segments, right? I mean, one that's going to be a key beneficiary going forward, and there I would put organized retail, strong PSU banks, maybe the infra capex players. So whether it is L&T, BHEL, you identify the company, KEC Construction, all of these kind of companies. These are likely to be the beneficiaries. These are available right now at cheaper valuations, and you need to identify the company that you want to invest in and go ahead and invest, and then reevaluate every month in terms of what your original thesis was and what's happening, right? The other segment, which seems nothing that has happened is negative for them, or there is slight positive. So the rupee going or depreciating is theoretically positive for tech companies. This is the second set of companies which are defensive, safe, valuations are in your favor. So I would put tech and pharma in that segment, right? Demonetization makes no impact on the pharma players, makes even lesser impact on pharma players which have higher exports. Most of the tech companies, beneficiary of rupee depreciation, have most of the business outside of India. So you'll need to balance out between these two segments. Currently, you will be safer putting money or being with tech and pharma stocks. You should be identifying the right stocks in the other three segments that I told you, and slowly and steadily buying stocks in that segment and seeing how things progress. One sector which we didn't talk about and which has done very well is the entire commodity space, right? You see the iron ore prices. I mean, or for that matter, copper or zinc, which is hitting new highs every day. So there are enough beneficiaries, and you've seen the move happening there, right? So if you see prices stabilizing here, to my mind, a lot of money can be made in the commodity plays as well over the next 6 to 12 months.
Right, and if probably things recover in terms of global demand, commodity would be one of the biggest beneficiaries because it's the most beaten down with probably one of the most excess supply right now.
Absolutely. I mean, it's coming out of a 7-year cycle of bearishness. Usually these things are very bullish. They go more higher than most people anticipate, and that's already happening, right? I mean, you've seen Hindustan Zinc almost go up 40-50%. Hindalco was 60 maybe 3 months back. It is at 180 right now. So you've seen those moves happening, right? I mean, that's the fun of identifying commodity peaks and troughs. You can make a lot of money if you are able to, ride the wave right.
Right. In terms of commodity, just wanted to understand, more than the valuations, more than the PE ratios, one has to look at what's happening globally and take a call on the basis of what's happening into the global metal prices or any major consumer of that particular metal. That's one of the important exercises if somebody is investing into metals, they need to do.
Yeah. 100%, yeah, 100%. You will need to look. So, what's the big rebalance happening? China has been slowing down over the last maybe, 2, 3, 4 years. Now it has become stable. Demand is slightly picking up. And then you have the US where suddenly Trump coming in has changed the entire equation, right? We were all prepared for Hillary coming in. Nobody believed Donald Trump would win, and he's come and he's been spot on from day one. He said industries have to, come back to the US. He wants to do, make America great again, make all the industries great again. The GDP in US is continuously on the uptick. So a rebalance is happening, and I think the demand is going to pick up, right? You hear Alcoa earnings call or a Vedanta earnings call, and yesterday we had Anil Agarwal on the channel, one of the channels, saying that commodity prices will stay here or go up 15 to 20%. Even if they do stay here for the next 6 to 12 months, the reset is so high. Iron ore globally is between 65 to 80 right now. NMDC's realization is between $30 to $32. Can't be like that, right? I mean, it can't be. This is just one example.
Right. So basically, there is no incentive to produce. To
my mind, yeah, there is. One needs to look at demand-supply situations.
Right. One beaten down big sector has been one beaten down big sector has been the telecom pack, and with e-payments, with e-wallets coming in. Do you think that it could be a big trigger for them now?
Yeah.
Or what Jio is doing, how competition is planning out? Is that something which is important to track and it's yet not factored in?
See, I think telecom is or rather has been in some form of consolidation over the last 2-3 years. Since Jio was planning to come, or Jio has come, and now Jio has had the scheme running for 3 months. The other players, to my mind, have adapted well, in the sense that, Bharti or Idea or whatever. See, the one big thing that's likely to happen in telecom, and I'm not an expert in telecom, I understand much lesser than most other experts in telecom. But one thing that is evident to me, with my limited understanding, is there's likely to be a 3-player market, or maybe at best a 4-player market. So there's going to be some hectic M&A activity in the telecom space. I don't think all the players that exist will survive. There have been rumors of Vodafone buying out one of the rivals, or stuff like that, or anything can happen. But my sense is, the industry is going some form of a catharsis, and I think there will come a time when everybody realizes and says that, look, we can't bleed anymore. Let's come to a consensus where we can all make money, and I think we are very close to that stage. This is an ideal time to identify a company where you believe that company will be standing, having a reasonably acceptable balance sheet over the next 6 to 12 months. See, Reliance is Jio is going to be there. Jio has a lot of revenue streams other than just Jio, right? So this venture is not going to flounder unless the numbers do not make sense, and that I think Mukesh Ambani would have had enough understanding of how long it's going to take. So I don't think for the next 2-3 years he's going to really worry about what's happening here. I think whether it's a Bharti or whether it's a Vodafone or an Idea or for that matter Arcom, I think there's going to be 1 or 2 companies that stand out, face the onslaught, and start making money over the next 6 to 12 months. So I would want to evaluate one of the companies and probably make an investment, which is contra at this point, but it would be worth looking into.
Right. Just a last word on Reliance Industries. Last time you were quite bullish about Reliance. It's just been there around the 1,000 rupee mark. You continue to be bullish?
Yep. Yeah, I continue to be bullish here. I am again, Pankaj, my bullishness is not 1 quarter, 2 quarters. I buy companies at a valuation that I'm comfortable with, and then unless the thesis goes wrong, I am not someone who sells out easily. So Reliance is just one of those stocks which is not moved. But I am reasonably hopeful. All the other businesses are kicking in now. You just have Telecom, which is something that at this point is not getting money home, but let things settle down over the next couple of quarters, and we will see how things pan out. But the other businesses are doing brilliantly, yeah? And it's available at a very cheap valuation. I'm very, very bullish.
Right, Niraj, thank you so much for taking out time for us. Always a pleasure.